And the banana zone says everything. It goes bananas. It looks like a banana. It's funny because it's kind of phallic. It's memeable. And so, but as I said, that is the banana is the big yellow candle of our hopes and dreams is all carried into that. And that's the liquidity cycle, the everything code cycle. If you want to use the Bitcoin halving cycle, which I don't really do, but it's all the same thing. It's all there. And this is the point. And it's all held in that yellow fruit.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. First time in the past 2 months, Bitcoin values fell below $58,000 earlier today, reaching a low of $58,000, $57,168. As per data from CoinMarketCap.com, the sell-off was preceded by indications of activity on wallets associated with defunct cryptocurrency exchanges. About $175 million worth of Bitcoin was moved by Mt. Gow and the German Federal Criminal Police Office to over-the-counter desks and cryptocurrency exchanges Kraken and Coinbase. Defunct Exchanges Rehabilitation Trust declared late last month that it will begin distributing assets taken in the 2014 breach. The announcement on the exchange's website also stated that Bitcoin and Bitcoin Cash will be used for the payments, which alarmed analysts who said this would lead to some selling pressure in both cryptocurrencies, even if it was just momentarily. Mt. Gow conducted test transactions earlier today, moving roughly $25 worth of Bitcoin across 3 transactions to different wallets, according to data from blockchain analytics firm Arkham. The firm speculates that this test may indicate an intention to begin the redistribution process, as entities with large crypto holdings are known to conduct similar tests within significant amounts before making larger transfers. Bitcoin markets have experienced some turmoil as a result of this news. Amidst the turmoil and sell-off, Real Vision founder and CEO Raoul Pal has provided his updated outlook and expectations for the cryptocurrency market in 2024 and beyond. According to Pal, a missing detail that most investors are not paying attention to is global liquidity eye conditions. The CMC Crypto Fear and Greed Index has dropped to 45, its lowest point in 2024. And the overall crypto market cap is also at multi-month lows. In a recent interview with Blockworks Macro, the well-known businessman and macro analyst explained that liquidity plays a key role in every crypto bull market, and that we are just at the point where conditions for liquidity are expected to improve significantly, causing an immediate response in asset prices. Pal anticipates that most asset classes will perform well over the next 12 to 18 months. He believes that cryptocurrencies and digital assets will easily outperform them all. Pal also believes that in the coming weeks, there will be a massive injection of liquidity from central banks throughout the world, which he believes will usher in the much-anticipated banana zone. And lots of things Raoul Pal discusses, so please watch the video to end. And share this video and subscribe our channel Everyday Finance. Thanks.
So Julian Battelle and myself kind of used the term actually for last quarter last year. We said, hey, listen, liquidity's picking up. The pre-election cycle, it usually goes bananas. And then so we called it banana zones. The front cover of Global Macro Investor was banana zone. And then we started realizing, you know what, the macro summer and macro fall or autumn, that's the massive banana zone. And then you see that beautiful chart of Bitcoin every cycle, and it goes vertical. And you're like, well, it just looks like a banana. And the banana zone says everything. It goes bananas. It looks like a banana. It's funny because it's kind of phallic. It's memeable. And so, but as I said, that is the banana is the big yellow candle of our hopes and dreams is all carried into that. And that's the liquidity cycle, the everything code cycle. If you want to use the Bitcoin halving cycle, which I don't really do, but it's all the same thing. It's all there. And this is the point. And it's all held in that yellow fruit. It's all so fucking mid-curve. I mean, I've explained there are 2 assets in a secular bull market, technology and crypto. Arguably crypto's technology, but that's it. So number go up the most. We've gone through 8 the fastest period of change in technology in all human history. We've just brought into the world infinite human intelligence to the power of whatever. We don't even know, to the power of what? The power of 10, the power of 100? We've just replaced humans by robotics. We've got cars that drive themselves. We're able to edit the human gene. We've got just La La Land stuff going on, the book of sci-fi novels. And these are companies with products. We're not even talking about them anymore. These are actually happening. And people want to invest in old stuff because, hey, it's cheap here. You're like, what are you missing? Do you really think anybody cares about your gold mine? Really, when you've got what's going on? Now, that doesn't mean all these stocks go up forever. It doesn't mean they don't go into bubble cycles. It's none of that. But it's like, if you are to choose an asset in a highly correlated world, choose the best performing asset. Let's say you don't trade crypto. You're doing yourself a disservice if you don't own technology. And I can hear people now going, well, he's just a bubble. It's all a bubble. You need real cash flows and real this.
Since Bitcoin hasn't peaked in its current cycle of appreciation, it will probably continue to rise according to a study report published by CC on Tuesday. Bitcoin has surpassed its all-time high this year. It peaked in March at a price of about $73,700, but it has since been trading between about $59,000 and $722,000 on average. The spot Bitcoin exchange traded funds, or ETF, which were approved and launched in the US in January and have drawn net inflows of approximately $14.41 billion to date, played a major role in propelling the market to its record high in March. ETFs enable investors to purchase a product that tracks the price of Bitcoin without actually holding the underlying cryptocurrency. Advocates of cryptocurrency claim that this has made it simpler for larger institutional investors to participate and helped legitimize the asset class. The term Bitcoin cycle describes the time frame in which the virtual currency rises to a new all-time high before plunging once more to enter a bear market or crypto winter. These cycles, of which 3 have now been completed since the coin's launch, have generally followed a similar pattern that has been centered around an event known as the halving, during which the reward for miners is halved, reducing the amount of Bitcoin available on the market. Halving usually happens months before Bitcoin reaches its all-time high for the cycle. This particular cycle, however, has been unique. Due to the enthusiasm surrounding the ETF in the US, Bitcoin surged to its most recent record high. Since then, it has been trading inside a range, and many have questioned if the cryptocurrency has peaked for this cycle. According to a CTA analysis that looked at past Bitcoin price fluctuations, it may hit a record high. According to the data and research firm Historically, the hoeing event has always been preceded by a period of price expansion that can last anywhere from 366 days to 548 days before creating a cycle top. Each cycle top has been longer than the previous one because of the asset class's maturity and decreased volatility. The last Bitcoin event occurred on April 19th, so those historical timeframes have not yet passed. In addition, we have seen a decrease in trading activity on centralized exchanges for almost 2 months after the event in previous cycles, which appears to have mirrored this cycle. This suggests that the current cycle may continue to expand until 2025, according to CT data. Let's back to the Raoul Pal interview.
Yeah, and look what happened to Amazon and Google and Facebook. I mean, it's all mid-curve. And I don't mean that as an insult. We've all been there. It's like once you simplify it all down, stop all of the monkey voices in your head, filter out all of the noise from Twitter. It's like, is tomorrow more digital than today? Yes, no. If yes, continue. It's as simple as that. It's like the world is going to be more digital tomorrow. End of story. So even if you do have a bubble cycle and then a crash, what should you do? You should buy more technology. Why? Because tomorrow's more digital than today.
Well,
I mean, it's really, I've really got it down to the most ridiculously simple theses. And it's embarrassing. I know it's embarrassing because people are like, this guy's a moron. I'm like, I've done, honestly, 35 years of work on this. I think I'm right. But, we'll see. And also, look, most regression analysis is, do 2 points exactly meet? And do they follow each other, the points? Well, if there's any lag leads, all the regression falls apart. It's like my game. I did this. I went to Oxford University and gave a lecture. I was never smart enough to go to Oxford, but they asked me to come and do a lecture at the finance club or whatever. And I turned up, and my speech was, everything they teach you at university about economics is bullshit. And, and I just showed them, I'm like, okay, so, talk to me about your economics models. And they all have these lovely linear models. I'm like, okay, so here's the chart of GDP. What is the feature of GDP? It's like, ask a child that goes up and down. Why do none of your models have an up and down business cycle? They're like, oh. I'm like, if a child can see that the NASDAQ is 97.5% correlated with global liquidity, the probability is that it is.
Yeah.
It's that simple.
Totally.
And they go, yeah, but you can have shark attacks versus cornflake sales. I'm like, do you honestly think we're talking about different things here? It's mid-curving it. It's finding, and I think mid-curving it a lot is fear.
Mm-hmm.
It's fear. You kind of go out of your comfort zone and you expose yourself to, listen, I've got something really simple, but very powerful. And people just say, it can't be true.
Mm-hmm.
It can't be true. Now, I'm not the one discovering technology stocks. I'm the moron who discovered them too late. If I'd have just done that earlier in my career, I'd have been a lot wealthier. I was there for the whole internet thing. Missed it all. I was the macro cynic. No, it's a bubble. It's going to mean revert. It's this and that. Wrong. All of it was wrong.
Yeah.
Change your mindset to look forward to sell-offs. Think, okay, somebody's given you a wealth compounding machine. And you get to have a go back. Let's say Bitcoin price goes to 200,000 and it comes back down to 70,000. You get to have another go again. That's a gift. I mean, Anson put it on Twitter and he's dead right. It's like, I cannot believe they give us this gift every 4 years where it becomes the worst performing asset and we get to make another 20, 30, 40x.
Mm-hmm.
And so if you use that mindset to say, hey, I'm in this for the long run. I'm going to stay in this trend probably for the rest of my investing life. I'll take money off and I'll do the normal things, but this is my investing journey now, like you do with your 401k or whatever it is. Then you should be very excited and thinking, how do I hoard as much cash as possible in 2025? So in 2026, you can play Chris Boniski on the internet, which is, he got it dead right. He'd hoarded cash and nailed it. And, I was still scrambling around adding. I mean, I luckily added all the way through, but I didn't have a big cash pile to do it with. I wish I had. Now, people might say, yeah, but that's why you sell out of the top. Don't do that. You can sell some out. But the thing is just buy the discounted prices if you get them, when you get them. And then you don't have to worry about nailing the low because you haven't got the money in the market, all sorts of weird stuff that happens. So it's basically not fearing things. It's looking forward to things. If you face your fear and actually turn it into your friend, it doesn't become a fear anymore. It's a psychological trick that works for every single thing in life. Most people live with their fears. They lie in bed thinking, fuck, am I going to make as much money as I want? Is the banana going to happen? And then am I going to lose it all? Okay, because they're thinking too short term. They're not thinking what it could be. They're not thinking about, okay, how do I de-risk it so I don't have to have these thoughts in the middle of the night? That monkey brain can go to sleep. And how can I get excited about the sell-off? Change that. You've changed everything.
Charles Edwards, the founder of Capro Investments, stated that certain launch data imply that Bitcoin's inability to produce the Bitcoin long-term holder LITH inflation rate has increased steadily over the last 2 years, according to Glassnode. The LT market inflation rate measures annualized accumulation or distribution rates over and above daily issuance to miners. Higher values indicate that LTAs are adding to sell-side pressure as their Bitcoin holdings diminish at bull market. New highs after 2 retests is a sign of weakness. Edwards explained this in his most recent newsletter, Tops Market Inflation Peaks over Nominal Inflation at the 2% threshold, which according to Edwards, usually indicates a high probability that the cycle top has occurred. At 1.9 today, we are too near to that level for my comfort. Dorsey flow is a metric that may be used to determine market cycles and determine if Bitcoin is bullish or bearish. It measures the amount of coins spent in relation to the overall trend. The Bitcoin Dread score has significantly increased during the last 90 days, according to further data from the Blast node. Edwards noted that this measurement peaks in this statistic are substantially larger in April, indicating that the average age of coins spent is significantly higher in 2024. Zikor usually has C cycle tops. 3 months later, the analyst provided an explanation, saying that the price had only decreased and the Dormy Z score remained unchanged. Peak still has a structure that, at its current value, is quite similar to the peaks in 2017 and 2021. The Dormy Flow score indicates that, in the absence of trading support, Bitcoin is overpriced in relation to the total amount of coins in a transaction. This may indicate that the price of Bitcoin has reached a cycle peak, which would be negative for the entire cryptocurrency sector. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.